Hello, fellow traders. Tis I, TheRumpledOne, coming to you Thursday, June the 25th. The year's 2020. Let's talk trading. Hindsight is not always 2020. Now, before I get into it, just remember these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. Okay, why do I say hindsight's not always 2020? Because you look at the chart and sometimes you see, well, if I got in here, I could have gotten out there and made a profit. But that's not always the case. In fact, Walmart and I, we were trading together over the phone, and there was this one time where price, it looks like you could have gotten in at a certain price, but it moved like 2 pips in the flash of an eye, in the blink of an eye. It was just like that. And so I couldn't get in the trade. It had already passed the entry point. But if you look at the chart, it's like, oh yeah, following my system, I could have gotten in here and made 5 pips or whatever. But in the moment, that's not the case. And I'm not talking about a repaint indicator. I'm just talking about looking at a chart and watching how price will jump. And you can't see that on the chart. It's like, oh, well, price opened there. Yes, it opened there, but by the time you click the mouse, it had already moved 3 pips. And 3 pips could be the difference between profit or being stuck for a long time or taking a loss. So when you're studying your charts, don't always think that what you think could have happened would have happened. Okay? So just keep that in mind when you're trading. And also remember, always have your stop loss in place. Have your risk management in place because you don't know what that next move's going to be. It could be one of those blink of the eye moves where, 5 pips against you, just like that. And if you didn't have your stop loss there, it might have been the difference between getting out with a loss of 5 and maybe a loss of 10 or more. So just remember that. And the same thing on the money management side, which I really think I'm going to have to make a separate screen because you have to take your pips off the table before the market takes it back. It was funny. Walmart and I were talking, and he goes, well, don't talk about leaving, pips on the table because if you go to a buffet, it's not like you're going to eat all the food in the buffet line. I said, but Walmart, that's not really a good analogy because, as you're eating, they don't send the wait staff around to take food off of your plate either, and that's what would happen. If the market were a buffet and you load up your, there's as you're loading your tray, there's somebody comes up behind you and starts taking, you know, items off of your tray or your plate. So anyway, enough of the corny analogies, right? Brain management. And this is, ties into the brain management. Yesterday we talked about mistakes, breeding more mistakes. But, when this hindsight, you look at the chart and this is where you can start getting the FOLO and the FOMO or the ROMO or the ROGO, all of those. Because you look at the chart and you go, oh, it could have had this, could have had that. Not necessarily. And the thing is, maybe 9 out of 10 times you're correct. Maybe 99 times out of 100 you're correct. But every now and then there's that one time. And all you have to do is be in the market when that one time happens, and it can go against you. And we saw, I believe, yesterday, maybe the day before, all the gaps had filled. Weekly, we're 66 pips above that weekly open. For the day, you can see we're well inside the opening range for the week and the opening range for the month. We fell back into those two ranges yesterday. And once again, for the day, we're down. But for the week, we're up, the month, we're up, and the year, we're down. And you can see here, it's just kind of oscillating. We have a weekly inside bar and monthly inside bar that we're currently inside of. And for the day, only 3 pairs over 100, kind of a quiet day after yesterday. If you took the breakout of the previous day's low, you had 7 pips, or about a 26 pip opportunity there. And on the day, you see we took out the pivot. So buy zone trade signaled here, signaled there, and it came back down. You probably should have taken your money off the table, ignoring all the short signals. Signal here, paid off there, and then you're free to trade in both directions. That's if you're using the pivot point bias. The rat zone. As you can see, using the 1 hour candles, this particular hour opened just below or just above the rat zone. You can see here it's been negative the whole time. Now we might be able to get a positive rat zone trade if this candle, if the next candle opens down here. And once again, this is the original rat, 20 pips off the daily low and 20 pips off the daily high. And this is the dynamic rat, and you can see right here, same thing happening on H1. Took out the pivot, and let's see. There's the weekly R1. We took out the weekly pivot, and the weekly S1 is down here. Once again, we took out the pivot, 2 missed pivots this month. And you can see here, the lower wick zone was so narrow, price couldn't help but cut in and out of it. And looking here at the breakout trade that we're featuring this month, you can see here, price broke below the previous hour's low this hour. Nice trade to be had. No break there, no break here. And this was an inside bar. That's why it's that vertical aqua colored line denoting inside bar. So there was a break there, a break here, a break here, a break there. So once again, just trading the H1 breaks. There's pips to be made, especially for the new traders. They say, how do I start? Where do I start? This is one of those types of trades you can start with. Just taking the breaks. A lot of times you might wait, and sometimes you might have to wait over an hour. Like this past hour, you didn't have a trade, and you don't want to rush it, not even by a point. You do not rush these trades because that'll be a mistake that breeds more mistakes, and we don't want that. And I have a new indicator that I just wrote because Walmart and I, we were trading and we got into a trade that we probably shouldn't have. So I made a new training wheels indicator, the no trade indicator. And what it does is has a message here. So you're looking at the candle. And then I put the message right here. So it's right by the buy and sell buttons. So if I want to over, I got no excuse for taking the wrong trade. So right here it says no sell PM. That's previous middle. And I don't have the mid dots on this chart, but on the actually we usually use this on M5. So on M5, and we get the wait. I'm not sure why it wants to wait, but I'll tell you what, I'll pause the video and I'll bring up the template that we normally use. Okay, this is one of the templates that I use for trading. It has the 3-level ZZ. And if you're wondering what these lines are, here in the indicator, show TRO mods true. And the reason I have them is because you see these blue lines, these are off of 1 balls or 2-ball, 3-ball lows, and then the reds are off for 1, 2, and 3-ball highs when they print. And then I just connect the past 2 dots, and then I connect the 3s, and it gives you an idea where price may turn. I don't like to call them support, resistance, or any of that other conceptual stuff. It's just where price, reversed before, so look for it to reverse again. So you see here, price came in, put in a 1-ball, and then got pushed back because we've had 3 1-balls before. And these dots, these are the mid dots. So what this is telling me, no sell previous middle. Why? Because the close is above the previous middle. It'll also say that if the open was above the previous middle, I wouldn't want to sell. No sell higher high or lower low. You see here, actually it should be higher high, higher low. This, like I said, just working on this indicator. So, and then here, no sell candle color. Why? Because it just turned green. Don't want to sell on a green. And no buy previous middle because it opened below the previous middle. So you wouldn't buy. And so this is one of those ones that can keep you out of trouble. It'll cut down on trades and it'll cut down on mistakes, because what happened was we were waiting for the beginning of the hour and we took a trade and it went against us. We went short and we shouldn't have. One reason we shouldn't have, because it opened above the previous midpoint, and the other reason, it had higher highs and higher lows. And it's like, and we were trading together and neither one of us said, hey, no sell because of the previous middle or because of the price action with the higher high, higher low. So as I was waiting to unwind from that trade, I just decided to code up this indicator. And so you can turn off the idiot mode, but I like to have it on. You can just turn that off and it'll just show it here. But I like to have it over there with the big skull just as a reminder, because I don't really need to see anything. This is where all the action is, this candle right here. The rest of it's, it's over. It's done with. It's history. So that's what I do. And this indicator will probably post it as soon as I do some cleanup, because some of these things are no longer valid. I just took the old price action indicator, made a copy of it, and then put in some new code. So right here, you see we open below the mid dot, but it's saying no sell higher high. It should say higher low. But sometimes you might take that trade anyway, just because of where it was and how it broke. But that's that would be overriding. But if you just follow this, it'll cut down on a lot of entries that you wish you wouldn't have taken. So for example, on this one, you say it did come down, but what happened? It just came right back up. So you might have been stuck right there. Because you never know. So you kind of have to play the price action, trade what you see, and let the statistics stay on your side. And so by having these things, and you can have rules written down in sticky notes or use the TRO My Notes indicator to put these things up here. But this is dynamic, it changes. So the computer, using the computer as an aid. So that's it for today, boys and girls. Like I said, hindsight's not always 2020. So remember, when you're trading, it's not what you trade, it's how you trade it. So go out there and drain the banks. And if you're new, please click subscribe and like. Click on the bell to be notified and share the indicator everywhere. TheRumpledOne signing